Joining us now for an exclusive interview from the summit, Treasury Secretary Steven Mnuchin. Mr. Secretary, I want to ask you first about the president's comment this morning that he has second thoughts about the trade war with China, which set off some confusion, which I hope you'll clear up. Which is it? Is he regretting how far the trade war has gone? Is he thinking about holding off on another round of tariffs? Or does he wish he'd been even more aggressive?
Well, Chris, it's great to be here with you. The president is determined to have fair and reciprocal trade with China. And this morning's comments weren't meant to back that off. It was meant to say that he's determined as ever on this issue. He wants a good deal. He wants free, fair, and reciprocal trade.
President Trump tweeted this on Friday about American businesses. I want to put it up on the screen. Our great American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the USA. Mr. Secretary, is the president ordering U.S. companies to stop doing business with China, and if so, under what authority?
Well, he would have the authority to do that under IEEPA if he declared an emergency. He has not done that. I think what he was saying is he's ordering companies to start looking because he wants to make sure, to the extent we are in an extended trade war, that companies don't have these issues and move out of China. And we want them to be in places where they're trading partners that respect us and trade with us fairly.
I want to just press down on this a little bit because the president claims he does have authority on something called the Emergency Economic Powers Act passed in 1977. Here he is on Friday night.
Well, in 1977, we had an act passed, a National Emergency Act. I have the absolute right to do that. We'll see how that goes, but I have the absolute right. 1977, check it out.
But there are a couple of problems here, Mr. Secretary. First of all, as you pointed out, the president has to declare a national emergency, which he hasn't. Secondly, the act only blocks American companies sending the transfer of future funds, not past investments. And it also, in the past, in the last 42 years, has only been used to stop businesses with outlaw nations or with drug dealers, not with trading partners. So is this really a realistic option for the president?
Well, the president has lots of options. And again, our first choice is to have fair and reciprocal trade. The reason why we've put on tariffs is for the last 2.5 years, we've been working with China to rebalance the trading relationship. And it hasn't rebalanced. The trade deficit has grown significantly, despite assurances from China that we would improve this. And as you know, when we were close to a deal, the president was happy, and they backed off of that. So the president does have lots of authorities. You know, we used these authorities successfully with Mexico on certain issues there. We now are close to hopefully having the USMCA passed. We had a terrific meeting with Canada today on this, and we're looking forward to getting that agreement passed.
So just to lock this up, the president fully intends to impose the next round of sanctions as he's announced on September 1st, unless there's some break in the negotiations.
Yeah, absolutely. And to the extent that the Chinese respond again, you can assume the president will consider all his options.
I want to ask you about another tweet from the president on Friday, and let's put this up on the screen. My only question is, who is our bigger enemy, Jay Powell, the head of the Federal Reserve, or Chairman Xi, the president of China? Question, does the president really regard the chairman of the Federal Reserve, whom he appointed, to be an enemy of the country? And I guess a larger question, which is, with all of these statements from the president, all of these tweets, how seriously, how literally should we take what the president says?
Well, Chris, let me first comment on the President Xi side of this, because I was with President Trump today, and he was very clear that President Xi is still his friend. He has a very good relationship with President Xi. We've worked on lots of different things together. But as it relates to financial issues and trade, you know, we have become enemies. We're not making progress. But this was not intended to send a message that President Xi is his enemy in the sense of all these different areas. And the other thing I would say is we're very hopeful that there will be a humane solution in Hong Kong. We're obviously watching what's going on there. The president again reiterated he thinks if President Xi sat down with the protesters, he could get this over with in a few hours. So we're hopeful that there will be calm in Hong Kong.
Well, let me pick up on that. If there isn't, if the Chinese were to crack down as they did in Tiananmen Square in 1989, what impact would that have on U.S. relations with China?
Chris, I'm not going to speculate because that's not the outcome we're hoping for. The outcome we're hoping for is a peaceful outcome. I think you know there was a deal with the UK when Hong Kong was transferred over. We'd expect China to meet that deal. It's something we hope we respect. They respect the laws and they respect what's going on there. But President Trump is hoping there will be a humane solution there.
So you were at pains to say, well, Chairman Xi is not an enemy of the country, but you didn't say the same about Fed Chairman Powell.
Well, I really wanted to first comment on President Xi. On Powell, I think I don't think it was a literal comment that he's an enemy. But again, you know my position on the Fed is that I don't make specific comments about the Fed. I meet with Chairman Powell weekly, and as my role as Treasury Secretary, I don't comment specifically on the Fed.
But this does bring up the bigger question, which I do want you to address, which is, you know, for Americans, whether just people investing, CEOs, when the president says something, how seriously, how literally should we take it?
I think most of the time you should take it very literally. I think sometimes he says things that are meant to be a joke. Obviously, the comment, you know, that recently on The Chosen One, that was said tongue-in-cheek. That wasn't meant to be a serious comment. I think most people know the president is serious about China and trade, so people should understand that. He is very determined. He's trying to correct something that's gone on for the last 20 years where we have a very unfair trading relationship that's been a tremendous disadvantage to U.S. companies and U.S. workers, and he's working hard to rebalance that.
Now, when Chairman Powell spoke at that Fed conference out in Wyoming on Friday, he said one of the greatest headwinds that he and the economy are facing are the president's trade policies. In fact, there are a number, and I think we could all agree, there are a number of signs of strength in the economy, especially jobs, especially GDP growth, at least solid signs of strength. But there are some concerns, and I want to ask you about those. Growth of business investment dropped from 9% last year to 1.4% now, and the manufacturing sector has contracted for the first time since 2009. Secretary Mnuchin, many financial experts say that one of the biggest headwinds that they now face as companies deciding whether to invest or investors deciding whether to put more money in the stock market is uncertainty about administration policies, and that uncertainty is a much bigger problem than whether or not the Fed should drop interest rates 100 basis points or 1%.
Chris, let me first comment that the single biggest thing that everybody's talking about here in France is the U.S. economy. It's the bright spot of the world. We have growth. People are now talking about doing tax cuts and cutting regulations in Europe. So people are looking at the Trump economic policies and wanting to replicate them because that's the reason we have all this growth. Second issue I'd say is the consumer is very, very strong. We're seeing that across the board. And the third issue I'd say is on these other statistics, I think you got to look at them quarterly. There's a bunch of volatility. At the end of last year, people worry about the economy slowing down based upon some numbers. And then the numbers came out in the beginning of this year, and it was clear the economy was roaring back. And as it relates to uncertainty, there's only one area, and that's trade. We're close to having a major announcement with Japan. We expect to have USMCA passed in the next month or two. That's going to add a significant amount to U.S. growth and growth in Mexico. And in Canada, we had the Korea deal done. There's 3 or 4 other major agreements that Ambassador Lighthizer is working on. So these trading relationships are going to add significantly to growth, and we're still somewhat hopeful that China will come around and enter into a fair, good deal with us.
Let me just push back a little bit on the idea that the only concern is trade, because the president has flipped on a few issues, for instance, tariffs and taxes in recent days. And I want to play some of his contradictory statements.
The tariffs are not being paid for by our people. It's being paid for by China. We're doing this for Christmas season, just in case some of the tariffs would have an impact on U.S. customers. Payroll tax is something that we think about, and a lot of people would like to see that. I'm not looking at a tax cut now. We don't need it. We have a strong economy.
The issue is whether or not you can see this widely. I'm sure you've read it too, Secretary. Whether this administration has a steady path to keep us out of recession. And the question I guess I have for you is, as the markets open on Monday after falling 600 points in just a few hours on Friday, what do you have to say to that?
Chris, first of all, we don't see a recession on the horizon. I don't think the yield curve reflects a recession. I think the yield curve reflects the fact that it anticipates the Fed is going to lower short-term rates, and the long end has already reflected that. That's the first thing. The second thing on tariffs, the reason why the president decided to delay $150 billion of tariffs was because U.S. companies had already purchased those goods for holiday in U.S. dollars. So it was a very specific situation that had nothing to do with passing on or not passing on. Those had been committed to prior to the tariffs going into effect, and that's something we wanted to do as it relates to holiday. As it relates to prices going up, going forward, we have seen China depreciate their currency. That's going to mean that a significant amount of the tariffs are paid for by China. We haven't seen any inflation yet. We haven't seen prices go up. We will have some exceptions for the rare circumstances where we have problems, and Ambassador Lighthizer is running that. So I don't think there's any mischaracterization on the tariff issue, and I'd be happy to comment on the tax issue if you want as well.
We're out of time, but that's only a better reason for you to come back when you're back in this country and sit across the desk from us, and we'll have a conversation. Secretary Mnuchin, thank you. Thanks for taking time from the summit to speak with us. And we'll be tracking developments out of France, sir.
My pleasure. Look forward to seeing you soon.
Good.